Have you ever wondered what credit cards are all about? Maybe you've heard about the rewards and perks they offer, but aren't quite sure how they work. Or perhaps you're considering getting a credit card but still indecisive. Well, you're in luck. In this video, we'll give you the ultimate introduction to credit cards, from how they work, to the benefits and risks, and everything in between. By the end of this video, you'll have all the information you need to make an informed decision about whether a credit card is right for you. Now, let's know what credit card actually is. A credit card is a physical card that allows you to make purchases, pay bills, or withdraw cash, depending on the card. Think of it as a short-term loan that you can use to buy things you need or want. When you apply for a credit card, the credit card company assigns you a credit limit, which is the maximum amount of money you can borrow using the card. This is the amount of credit that the company is willing to let you use to make purchases or pay bills. As you use your credit card to buy things or pay bills, your available credit is reduced. You are then required to pay back the amount you spent from your credit limit to the credit card company, usually with interest. It's important to note that there are two types of credit cards: secured and unsecured. A secured credit card requires you to make a cash deposit when you open the account, which usually doubles as your credit limit. An unsecured credit card doesn't require a deposit, but you may need to have good credit to qualify for one. Understanding credit cards is an important part of managing your finances. By knowing the ins and outs of credit cards, you can make informed decisions about when and how to use them to your advantage. Have you ever wondered how credit cards actually work? Credit cards are incredibly versatile, allowing you to make purchases online, in stores, and pay bills. When you use your credit card, your card details are sent to the merchant's bank, which then requests authorization from the credit card network to process the transaction. Your card issuer then verifies your information and either approves or declines the transaction. If your transaction is approved, the payment is made to the merchant, and the amount of available credit on your card is reduced by the transaction amount. At the end of each billing cycle, your card issuer sends you a statement that includes all the transactions for the month, your previous and new balance, minimum payment due, and due date. The grace period is the amount of time between your purchase date and the due date on your statement. If you pay your bill in full during this period, you won't incur any interest charges. However, if you carry a balance from one month to the next, your card issuer can charge you interest. Your card's annual percentage rate includes the cost of carrying a balance on an annualized basis, as well as other fees like an annual fee. Many credit cards have a variable annual percentage rate that's tied to the prime rate, meaning that your card's annual percentage rate can change over time. The Card Act of 2009 sets guidelines on when credit card companies can and cannot raise your rate, helping to protect consumers. By understanding how credit cards work, you can make informed decisions about how to use them and avoid unnecessary fees and charges. Why use a credit card instead of a debit card? Although credit and debit cards may appear to be identical, they are not. When you use a credit card, you are not spending your own money, but rather borrowing money from the credit card company that you must repay, often with interest. On the other hand, a debit card is linked to your checking account, and the amount of your purchase is immediately deducted from your account, leaving no debt to be repaid. In addition, using a credit card can impact your credit score, while debit card use does not. Consistently making timely payments on your credit card balance can improve your credit score, whereas late payments can hurt it. Furthermore, maintaining a low balance in comparison to your credit limit can positively impact your score, while maxing out your card's limit can have a negative effect. Lastly, credit cards offer greater fraud protection than debit cards. The federal government provides stronger safeguards for unauthorized credit card transactions than for debit card transactions. So, while debit cards may seem like a convenient way to access your funds, credit cards offer distinct benefits that may make them a better choice for certain transactions. Can you write off credit card fees on your taxes? Or in other words, are credit card fees tax deductible? If you're a business owner and you use a credit card for business purposes, you may be wondering whether the fees associated with your card are tax deductible. Well, the answer is mostly yes. The good news is that you can generally deduct annual fees and certain other credit card fees on your taxes. This includes balance transfer fees, foreign transaction fees, and convenience fees for using your card. However, Keep in mind that the IRS only allows you to deduct fees that are directly related to your business operations. It's important to note that personal credit card fees, such as late fees and over-limit fees, are not tax deductible. Additionally, if you use your business credit card for both business and personal expenses, you can only deduct the portion of the fees that were incurred for business purposes. So, if you're a business owner and you're paying credit card fees, be sure to keep track of them and consult with a tax professional to ensure that you're taking advantage of all the tax deductions you're entitled to. Why should you consider using a credit card? Using a credit card can be beneficial in various ways, particularly for those who use it responsibly. It can help you establish a good credit score, which is essential in getting lower interest rates for other types of loans, such as car or home loans. Additionally, credit cards can assist with budgeting either by providing budgeting tools or enabling you to track and organize your expenses. Besides, credit cards frequently come with rewards or cashback programs, particularly if you spend a lot in certain categories like travel or dining out. One of the most significant reasons for using a credit card instead of cash or a debit card is the fraud protection that it provides. If your card is lost, stolen, or if there are unauthorized transactions, you won't be held liable for the fraud. To sum up, credit cards can help you build your credit score positively if you use them responsibly. This means paying your bill on time, keeping a low balance, and only applying for new credit cards when necessary. It is important to remember that paying your bill in full each month is the most effective way to avoid interest charges and maintain a healthy credit score. Hope you got some value from this video. Stay tuned to GoldenTooth for more useful finance knowledge. Stay informed until I see you in the next one.